Welcome, it's the Crypto Sniper. Thank you for being with us again. Yes, glad to be with you. We're going to do a video specifically on HBAR for you. Technical analysis breakdown on HBAR and why we think it has even more upside. Yes, still to come, but not a buy right at this very minute. Wait for a pullback. Yes, that's what we're going to be doing today. Thank you for watching. I am the Crypto Sniper. You are watching technical analysis of the crypto markets. And by the way, in the comments right now, while you're watching this, what of the big 50? Keep it in the top 50, ideally the top 30, so we don't get into light volume, no spotty charts nonsense. Keep it in the top 50. Which tokens would you find interesting that you'd like us to talk about technically for you as followers of this channel? So let's go straight to the charts. Here we go. Here is HBAR. Now, actually going to take you up a little bit higher. Let's go to the weekly time frame. And what you'll notice is right here on Bybit, you can see that this was a bear market all the way down. And in fact, just on the cusp of 2023, we've got it literally Christmas Day. Is it Christmas Day that week? December 22, not far away, almost a year later. That's right, almost a year later. That looks like a seminal low. That looks like a low, literally. As it's funny how this happens, by the way, on year ends, final lows, final highs, very close as year ended. I mean, the last high 1718, it wasn't the last high 1718, the low here kind of 20, 22, 23. Anyway, kind of interesting that. So you can see this is starting to make a situation type take where in actual fact you could on the super macro be getting, let's go fat cokey with this one, massive bear market, there you go. But what you also might have is in here a W into that low. That's a sharp left buttock. This is a more rounded one with some complexity and heading up to, wait for it, that 0.1, which represents 10 cents for it. I'm going to drag this right the way across and I'm going to turn it into teal blue and we're going to stick with the 10 number. Let's get rid of those decimals there, 10. That'll be OCD for me if it doesn't. Style, we want light blue. There we go, teal blue. Okay, so that could be a neckline for us at a W bottom. Yes, what did that mean? Ooh, interesting stuff. What would it mean? What would it mean? Well, we talk about a couple of different views that you could have for HBAR, and that could mean if we drag a projection over here, roughly up from the neckline, let's make sure that it is not dotted. It looks a bit dotty. Let's not get spotty and dotty. Let's do that and pull it on up. So there's a projection to be had here, and we think that a macro big move that could be quite substantial. Yay, substantial. Who doesn't like a substantial move in crypto? Yep. Could your token be about to make a substantial move in crypto? That would take you to around 27,954. That sounds like you're going to run 29s, possibly 30 on an overperformance run. Isn't that interesting? Coming up to the 10 cents. And where are we now? 9 cent 176. So 9.1 cents at the moment. W bottom could be suggesting that you're going to run 30 and beyond. In fact, you've gotten higher already before. So remember, big reversals aren't the end at targets. They just tend to be places where they rest and pull back. So partial closure of the position at the target is good because you'll be able to buy it back probably cheaper or later at the same price. So either same price or lower later. So you lose that cost of going nowhere for a while. Depends also how it finishes. If it's a real blow-off finish into it, you could get quite a strong pullback afterwards, even though it might go some way beyond your target initially. Don't chase in and FOMO back in. You wait for that pullback. Key levels of significance and targets. So you've learned that 10 cents, key round number, is a really important level. Why else? Well, you could see that it failed over here, your H1. So that's framing number one on a weekly time frame. We are known for going macro to micro. Here you're starting to get key insights on HBAR. But there's more, there's always more. Real technical analysis done by real people. It sounds like an advert we used to have. Omega Tequila, as drunk by real Mexicans. Anyway, South Africans will laugh. The rest of you will go, what's he on about? Yeah, anyway, so there's something else that's going on in here that generates a potential target for us. It's what I'd call a bit of a scrappy HVF. Initially, I was like, no, not the best, but we were looking at it, we were discussing it in our community that you too could become part of right here. First link in the description below. Look at it. There it is. There, it's above the roll. Boom, click it, book a call. You too, make your decisions about crypto. You've got to maximize this crypto bull market, guys. You've got to maximize it. You've got to get out. You'll never get out at your highest watermark, but you've got to get out 80, 85, maybe even 90. And that's targets selling when everyone is dopamine drugged, max leverage. It's only going up. Can't see the next stage of the cycle. Meanwhile, you're in a major blow off. How many of you right now, put your hand up, be an honest soldier, have round tripped into massive account all the way back down to where you before, and some of you even worse still? How many have given too much of your profits back, knowing when to take off, reducing size when everyone else is giddy, only moon is so critical. Targets do that. You need a real reason for your targets. Patterns, geometry, HVF method gives you that. Plus, when overperformance may apply, what methodology do you use? We never discuss that on YouTube. It's part of our advanced special theory that you too can learn about by being in our community, both in the amazingly recorded content and watching us implement that in our trading situations live in many markets, not just the crypto markets. Anyway, what else are we looking at? Well, the other thing we're looking at here is this. Squeezy Japanesey. So this is in fact that low. You can see we've got our projection from that W bottom, sharp left buttock, rounded right. Very common. So the volatility is lowering. You get concavity a little bit better, while very violent and more volatile in the first, the left. More chilled in the right. Not as low either. More cupping price behavior. However, with a bit more looking, we actually can see there is a bit of a squeezy going on in there. So with a draw tool that we are now beta testing, we're going to draw that upside HVF on what is a lower time frame. We've gone from the weekly back down to the daily. So we're dropping time frames as we go in here. Multiple cross market analysis, in other words, across dollars, across euros, across other tokens, BTC, Ethereum, how is HBAR doing? And then multiple time frame analysis from the macro down to smaller time frames. We will be going below the daily as well as part and parcel of this. Anyway, let's do that draw. So we're going to select our draw tool and we're going to come right in. So while I'm selecting a key point for the draw to actually invoke itself, I will also make the settings. We are looking for an upside projection, and we do the adjustment on our tool there, and here we go. So what do we have? Interestingly, very interestingly, we have a trade that is 8.67 that, as I say, we were discussing in the community before it broke, during its break, and then later as it was continuing on up, because it has shown pretty good strength, is one of those alts that have been slightly overperforming, where Ethereum has kind of been shedding dominance for a while now, even though BTC and ETH largely traded up beyond the range following from my previous video. We will update that video on HVF method versus divergence on lagging indicators between Christmas and New Year to see how it all turned out. Could be a little softening now back into the range for Bitcoin, a little softening on Ethereum. We're going into the tail end of the week, typically a little softer period generally. People go risk off a little bit more as we go into weekends. Stuff happens. Even though the crypto market trades on weekends, jobbers and others in the traditional markets generally wind down positions by Thursday and Friday. So what do we got here? An 8.67 trade. Had you got long alongside us at the 62 level, that's 6.28 cents, you would already be quite substantially up, about 50% up at 9.15 cents. That is pretty decent progress. We got a little bit of a squeezy and a wind up here. We'll look at that on lower time frames. After you slip through the break, you wound up and you've been moving pretty quickly since. What is really interesting is the second interim, the next target apart from the final typical target for an HVF is here at the 10. Isn't that interesting? So the 10-cent mark, which was resistance for the H1, which is also the neckline visit for the bigger time frame that you looked at with me on weekly time frame, will be another level that will be run and feign back, likely to break it with momentum, pull back to it, and maybe even a tad under it as part of smashing through and then exhaustive back. What was resistance becomes later support, but you might put wicks just below it to trade through the level. Typical key level of significance, price behavior. That is what we expect. So this would be a W event, triggering event, the double bottom, the sharp left glute, the rounded right one. This will be a triggering event for that 27 plus, likely to blow off and run 30 cents. That's right, 30 cents was 3 cents at the low here. That would represent a 10x. How about doing the maths properly? A 10x from its absolute low on that target make. By the way, the W target is not going to be the end of it. Other theory that I can whisper in your ear is that the first setup in a new trend tends to overperform. In other words, we won't close the whole position at this target, and guess what? You've already got another pattern that would have triggered with an even bigger target. So you may not close it all, but you can expect a rest once you A, run the 10 cents and have your pullback, B, surge onwards and run the 14.5 where you're likely to have another possible pullback period. Why? That's your HVF method target over there, generated there. That is your second interim target where you'll get some degree of pullback after you've broken it. Isn't that interesting? Multiple confluences of key levels of significance. Round number, 10 cents. Previous resistance. Second interim target, 10 cents, and then 14.5, which will probably be in and around the 15 just being run, 15.5, before you get a bit of a pullback. So we're starting to have an idea of the pattern and the degree to which HBAR goes up and is likely to rest. Targets are key points where you're likely to get progress decay, which means time elapses and you don't get any more upside. So it means you stay the same price roughly, or you actually are even lower. So the cost of carry that you may have is actually not compensated for by higher prices. That's right. That's why you get out and you buy on limits back in on a lower level, and you get to make profit on that same territory you've already made profit on. Doesn't that sound cool? Maximize this bull market, guys. Not only must you make the most that you can out of this bull market, you have to also preserve that which you make. Hence why we are also the reset sniper, and we help you preserve those profits that you make by the fact that you're probably born in the same country, passport of the same country, bank in the same country, business in the same country, businesses bank in the same country. Guess what? You are not doing very well on the 5 flags if that's your case. Job in the same country, etc., etc. He says somewhat ineloquently, and as a result, you need to start thinking about the reset things. Don't worry about it once you're already wealthier. You're going to execute great this bull market, especially if you're remembering to hit the first link below to book a call, talk to a friendly face and community member long before they were involved in onboarding with people such as you with just a couple of years more experience than you in trading HVF method, where they will show you our platforms where our content is recorded for you to watch, and also how you can watch us implement this very trading strategy live with regular updates every single day by me on phone app, on desktop, all done without using Discord, WhatsApp, or Slack, or any of these other groups that are scraping your material, scraping your profile, and doing everything else in a private environment. Anyway, back to this upside HVF and 14.5. That will be another point you'll rest before heading on up for that 27 target that we discussed on the weekly time frame. What about going lower? What's been happening going lower? How do I know your TA works, Francis? How's it that I can have any degree of confidence? First of all, we're talking about the future. I don't know the future. This is an on balance of probability. There's probabilities and possibilities, but your friend is patterns, geometry, and targets, and tight stops with expansive rewards. We know that. We help teach that, and we get you to trade that. So let's see how it has gone on the lower time frames. If it works on the lower time frames, it's even better, I warn you, on the bigger time frames. We wipe our face, we go to the half hour. In fact, you see that chart, I've actually done a draw for you, which I will show you. And here she comes, just a bit earlier. There it is. So that's on the 1 hour. The other one I was showing you is on the half hour. So this is just an example of how this particular token has traded over the last few days. So it was strong coming in here. Let's go again with the big blue, and we'll use the fat cookie. Strong. Then it came in, whoops, bear flag. That would have been a short call. We're not looking to short in a bull market. We don't want to be too cute or clever, but that would be a trade to the short side as you fall out of a basing ascending grind line, which is one subfractal of a bear flag structure, which also has a splitter and a capping ascending grind line. That's right. We break every pattern down into its anatomy of levels. Nobody else does this. This is HVF method for you. Rising wedge, basing ascending grind, capping ascending grind, your splitter over there. That would have been your short trade if you were shorting. We didn't short it. I'm not claiming it. Down. We're observers. Now you see head and shoulder, left shoulder, big head. It gives you a nice big target as well, all the way from there. That was your kind of trough low. Don't forget, we've been bullish strong at this point. So this is a pullback low in a bull trend for HBAR. What did you get? You kissed the key level. What was the key level? It's 8. Fancy that. And we're telling you how 10 cents is going to be a key level. We're showing you how a lesser number, 8 cents, has been a key level too. Look at this interaction. Just run over there for a left shoulder, all the way down. Just run there for a right shoulder. Pumped through, got dumped, resisted initially, break and feign back. That's one of the stages of our 5 stages of a breakout that you'll learn about in our theory. Typical respect, often known in traditional technical analysis as the return move. That's your right shoulder. Since then, up, pretty single-minded, into your targets, 2 shooting stars after making your targets. You think that's a fluke. You think it's a coincidence. Into a falling wedge, continuation. You can go long there, back up, and now you're pushing a little bit of extra profit after the target's being made, but it could get a little softer, especially as I was mentioning, end of the week, maybe Bitcoin and Ethereum initially a little bit defensive for a bit. They come back into range a tiny bit before pressing higher. Both those, in our view, will be in a macro bull market, especially dominance on Bitcoin side over Ethereum at the moment. But HBAR is marching higher as well, possibly a bit of a pullback if Bitcoin comes back, but further numbers to get, which have included so far the 10 that you need, the 10 cents that is, as we disclosed with the HVF draw. If we go back to the main chart and we take you back to the daily. So I'm now recapping everything I've told you. There is your 30 minutes stroke 1 hour short time frame price behavior, how it's performed. This is live data currently at 9.1, so a little bit of a pullback possible now. That could be driven by a little bit of a rest back into range. Bitcoin's at the top end of its WEF burger. You've left the locust patty on your high side of the bun, looking to make new highs, but maybe going to rest a little bit first, pull down a bit before it smashes out the top. In our view, bull bias, continuation bias, generally on balance of probability, more likely than other forms, such as divergence on indicators. That's right. So that's your 30-minute stroke 1 hour chart. Back out to the 4 hour where we gave you the draw. In fact, it was the daily, my apologies, where we gave you the draw. Let's stick it on for you again, indicator, so that you can see the HVF method bull. So we've got a number of framings on a cross level of time frames that are actually suggesting there's more upside to come for HBAR. And you have a number of points whereby those framings will actually take rests. These are known as interim level targets. So those are typically points where you don't want to be adding on as you're approaching those. You want to be more conservative. You might want to take a little bit off on the basis that you could buy back in later and actually lock some profits and make some money on the same way. The HVF target, again, reminder, around about 14.6. It says it right here, 14.566, a total of 8.67. Had you got long here on the just-in-time entry with a stop there, you would be on an 8.67 RRR. When last did you get that? By the way, you won't close at 14.566. You'll only do a partial close because you also have the W bottom, which takes us up basically back where we started on the HBAR chart altogether. That actually suggests you're going to run the 27,977 target, which will probably overrun slightly. That's almost 28 cents. You could be lucky enough to get 30, but you could certainly close 50% at 28, which would be taking you, in terms of Bybit, which I don't know how long they've had HBAR on, back to previous levels, closer to highs. When you came in 21 into 22, that's January 22, kind of feels like top of the bear, top prior to bear, but we don't have enough data here for that. This overall, however, is the W bottom. So we've shown you a macro upside HVF. Overall, that's the spiky high volatility version of the left butt cheek of a W bottom. And now you're getting a more rounded right bottoming fractal, which is going to have as its neckline that 10 cents. We've already got the HVF target that is suggesting that that is an interim target level, which means you'll probably rest after it's run. Hence the draw looks something like that with a pullback. I wouldn't chase in now. You're already in the nines, the low nines, 9.1 cents. Wait for that run, buy it on the next dip, and look forward to it running through the 14.5. That would be the full target of the upside HVF, and then pull back, and then later on to run through the 27.9, possible chance of taking out the 30 before it rests again. How high did HBAR trade in history? I'm not too sure. I'll have to check a different exchange. I'm not sure whether this one only got listed on Bybit some long after it got listed on other exchanges, so I don't have too much more history to show you. But this is enough. Getting to 30 cents or 28 cents. Remembering this was a 3-cent bottom. A 3-cent bottom, maybe making 30 cents. That's a 10x. It's pretty good for most people. And W bottoms aren't always the end. The target of the W bottom isn't necessarily the end of the move. This will probably be a secular turning point for this, and new highs may well be expected, and I'm not even confident that was the last high. It's probably just prior to the listing on Bybit for HBAR. So go and have a look. What was the previous high? And you could in due course be surpassing that, because this is a secular turning double bottom that could have a lot more to offer you. However, you now have levels where you can take off and expect pullbacks to reaccumulate lower down, so that you can profit again on making the same price range again to the upside. Okay, there you have it. If you found use out of this video, HBAR, hit the like, hit subscribe, and always notify. Always notify. Oh, humor's not always appreciated by the Google algorithm, and we are sometimes not offered. So hit always notify. By the way, click that link below to get the opportunity to have a call with us to join our community. You truly need to maximize. You want to hold on to no round tripping this bull market. You want to hold on to that profit. You want to get out close to your high water market. For that, you need targets. For that, you need grounding when everyone else is getting giddy with profits. And that you need experience around you, community around you, and you have to be backing off when everyone is wading in. And you should be wading in now while everybody's a little bit uncertain, but never wading beyond normal money management rules. You need stops and methodology. That is what we provide with HVF Method. Targets, stops, methodology, when overperformance can be expected, how much and how you track and exit on overperformance, even in the absence of big macro patterns like this W bottom and targets. When do you close if there's no target above? We show you how in our community. Till next time, thank you for watching. And if you've enjoyed this and want to give us your token, ideally in the top 50 that trades reasonable volume, write the token you would like most to have technical analysis, similar to which we've just done on HBAR, preferably with history. If it listed a month ago, I'm not doing it. If it listed 3 days ago, I'm not doing it. If it listed 6 months ago, I'm not doing it. We need history, we need data, and we need decent volume. Hence, top 50 only. Thank you. Until next time, we catch you later. Bye for now.